Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday. We're at the 24th of April, 2023, 6:15 p.m. Central Time. Well, the day was one of a weak dollar, a bounce in many of the currencies, and follow-through tonight. One of the currencies I'm keeping my eye on here, and even though it's got a bearish tone to it, is the Japanese yen. And the reason is I have no idea what the new bank governor is going to say. He's got his first meeting, monetary policy, on Friday. The common thinking would be, well, this is where he just holds the road on what Mr. Kuroda did. He doesn't say much. Or does he put his thumbprint on things and in some manner allude to maybe those easy money policies going to end? I don't know. But why stand in the way? And I thought about it over the weekend, and I'm a bear in that market. And I told my traders today, maybe it's a good thing to just walk away and let's see how it sounds. Is he going to sound just like Mr. Kuroda? Is he going to have his own way of doing things? What will he say after the meeting? I think it's time to walk away, because you get where the market comes in and it doesn't expect a lot, and then you get somebody new in there and things change very abruptly. I've been part of that. I know it. In the stock indices, a little bit of a pullback. With the dollar down, you would have expected that the metals are getting a bump, and they are. Gold is stuck not far from its recent highs. $2,000 isn't a bad place to be stuck in gold. That's not bad action. You can see the copper market staying under $4 at this point. Platinum market keeps trying to come back up and get into the 1100 plus zone. We'll see if it's able to do that. But let's take a look, if we could, at the chart action and get a feel for what is going on here. So in the June gold for the week, today's the first day, you're up approximately 0.5 percentage point. And you can see this market is held on here very, very well. If you take a look at the recent highs on a closing basis and you're in the 1990 area, you're not far. You're right, just hanging right there. When we come over to the daily bar chart, the market has broken down. You could see that the swing line has lower highs and you've had the lower low patterns. The market is under the line in the sand, which is the 18-day average of closes. So if we stop right here for a moment, trend down, bias down. Can't argue that. That's what the chart's doing. Resistance, 2013.80. You have to get over on the current pattern, the number 2024.20 to negate that. If the market were to drop further, the support comes in at 1979.10, and momentum, as we are right now, is oversold. To me, that's important. Oversold doesn't attract a lot of new downside capital. So even if it falls, I would expect big short covering to come in at 1979.10. And the action's probably going to be one where the market struggles right here to get back to 2013.80 to see what it wants to do next. When we look at the gold-silver ratio, it's fallen down, and the silver market is just sort of hanging right here where it's been. Well, when you look at why, you can see it. In the July silver, and I've moved from the May to the July now, we have a higher high, lower low pattern. Now, it changes. It gets actually more bullish if the market just doesn't take out today, that is Monday's low. You actually get even more bullish if you get over the 25.80.5 zone, calling for a challenge of the upper band. What turns the market then bearish? Well, nothing on this particular pattern. That's the interesting part. If you look back here, you had a slow stochastic reading that had been embedded. Embedded means the red and the yellow numbers were going sideways over 80. Right here, you lost it. When that happens, it's a strong indicator that price is going to move to the closest moving average. Now, it could be a combination of the average going up and price coming down to meet it. And that's just what happened here. When it's just price falling to that average, that's a bearish situation. I don't consider this a bearish situation. I think the market is just trying to hang in there right now, waiting for whatever the next thing is going to be. In the copper market, I can make an argument here in looking at this that I've got this wrong. It should be lower highs and a lower low. You're in a downtrend that is oversold. You've made your first test in July copper of the 100-day average and you're underneath it. I don't know why I put, I'm wrong on that. It should be two arrows pointing down. That's how it should be reading. So trend down, bias down. To complete the downtrend, maybe you go towards the 393.75 area, but you don't have to. Resistance is going to be the combination of the 18 and the 100-day average. If that 18 gets underneath the green, it's another bearish signal. And I was a guy that was bullish, but recessionary talk, China not really doing what we thought it could do. It's come back, don't get me wrong, but it's not crazy. Even the jet travel for their upcoming May Day holidays, I've been studying the airline bookings there, and they're not as strong as pre-pandemic levels. Everything's still a little bit softer, and you're seeing that in the copper market. In the platinum market, are you going to lose the embedded reading? Well, you're certainly acting like that, but let's step back just a little bit here and see what that really means. So to lose it, you got to close underneath 79. You didn't do that on the close today. You're doing it right now. So unless this market comes up rather dramatically and rescues itself, you don't want to be playing the long side of the market. It's probably a good spot to just walk away and say, it's losing the reading. If it stays lost, you've got an open area here that you can go all the way back to the 1050 area. I wouldn't let it get away from you on that. And in the palladium market, you're already pointing down in momentum. Look at how the failure happened at the first challenge of the 100-day average and the upper Bollinger Band, and that was just too much for the market to bear. And I always point that out. Key moving averages, when they're hit for the first time in a long time, be it upside or downside, offer support or resistance, and it's always an important thing to pay attention to. You did it right here, for example. With the Bollinger Band especially, oh, no. That is where everybody's going in and they're wildly bullish, and I'm telling you, no, that is not the spot. That's where the pros are probably liquidating. And you've got a downtrend in the dollar. Can you make it to the 182 level? Unless you get back over 101.85, the bears have total control of this right now. Why? Momentum down, trend down, bias down. Maybe the market makes its run right there. Our good friends over at Modern Trader had put together some pretty neat things over the years. And technical trading tips from the pros. You see these a lot of times. Everybody writes them, but I happen to like the ways they did it. Why? Jan square. Do you even know what that is on what a Gann square is? Benefits of relative strength. Well, I happen to use slow stochastics, but it's the same concept. Money flow. Rules for bottom fishers. Let me give you the best rule. Don't be a bottom fisher. That is the best rule. The Gann square of 9, what does it mean? Well, they applied it to the NASDAQ, but there's other ways to do it. Breadth of relative strength and benefits. I think it's really important to understand that. Optimizing stops. I can't say enough about that if you haven't figured it out on your own. So how do you get this and our other free brochures? Just go to our website under free offers or move your cursor right up here. You'll see an icon. It says free offers. Give it a click. I'm Ira Epstein. You have yourself a great day. I will catch you tomorrow. I wish there were more to say, but don't make something out of nothing, and we got a lot of nothing right now. Take care.